Okay, so if you're an entrepreneur outside the US, you already know the deal. The United States is the biggest, most lucrative market on the planet. But you've also probably slammed into the same wall everyone else does. Getting paid can be an absolute nightmare. So today, we're going to walk through a strategic playbook, not just a list of rules, but a way to understand the logic of the American financial system. Let's get into it.
I mean, it's a fair question, right? You've got an amazing product, you've got American customers who are lining up to buy it, and then, boom, you hit a wall. Suddenly, the US financial system feels like this impossible black box of weird rules and compliance hoops. Banks shut down your account with zero warning, and you're just left high and dry. Well, we're gonna crack open that black box for you. We've broken this playbook down into 5 essential plays. First, we'll cover your US corporate identity, getting your foot in the door. Then we'll talk about building your financial hub, which is your banking setup. After that, the really interesting part, the art of moving money without raising red flags. Then we'll demystify US tax compliance. And finally, we'll talk about the big regulatory headwinds you've got to watch out for right now. All right, play number 1, your US corporate identity. Look, this is the absolute foundation. Everything else we talk about today is built on this. If you don't have a proper legal entity in the US, for all intents and purposes, you're invisible to the American financial system. Now, your best friend for this is the limited liability company, the LLC. And it's probably way simpler than you think. It's really just these 4 steps. Pick a state, get a registered agent, file the paperwork, and know your duties. But we're gonna zoom in on that very first step because it's a huge strategic decision, choosing your state. So this is a classic fork in the road. Think of it like this. Wyoming is for the online entrepreneur, the solo operator who wants maximum privacy, low costs, and speed. It's fantastic for that. But if your plan is to go out and raise money from venture capitalists, you pretty much have to go with Delaware. It's what VCs know and trust. Its legal system is the gold standard for them. So this isn't just paperwork, it's a signal about what kind of company you're trying to build. So your LLC is officially formed. Awesome. Now you're ready for what is, for most people, the single biggest challenge, opening that US bank account. This is the key that unlocks the whole US economy for your business. You've basically got 3 ways to do this. The old school way is to fly to the US, walk into a bank, and open an account in person. The most popular way these days is to do it online with a fintech bank. The third option, and I gotta warn you, this one is by far the riskiest, is to appoint a US-based manager to do it for you. You're handing over a massive amount of control, so you better trust that person completely. Okay, let's just bust a huge myth right now, because this trips up so many people. You might get a bank employee telling you that you absolutely need an ITIN, an individual taxpayer ID number. Let me be 100% clear, that is not a legal requirement. I deal with this every single day. It's almost always just a misinformed employee, not an actual legal barrier. You do not need an ITIN for a business bank account, period. So you did it. You have your entity, you have your bank account. That's huge. But now the real game begins. You have to operate inside the system without getting your account shut down. And that means you have to understand how US banks think about risk. Because trust me, they are watching. See, banks have these automated systems that are constantly scanning for what they consider risky behavior. Stuff like money coming in from Stripe and flying right back out the same day, or sending wires to certain countries. Even just letting your balance sit at 0 for too long can be a red flag. And they are super sensitive to sudden large transfers or, anything that even smells like crypto. This is the stuff that gets you flagged and shut down. This slide right here, this is the secret. It's not personal. It's just a cold, hard risk calculation. Every bank has a secret internal risk score on you. When you get paid from a well-known US company like Stripe, your risk score goes down. You look legit. But when you turn around and wire money to a country they flagged as high risk, your score shoots up. And if that score crosses some invisible line they've set, an alarm goes off and they close your account. It's as simple as that. So how do you win this game? Well, the strategy is insulation. You have to build a buffer. You have to protect your main U.S. bank account from any transactions that it might see as risky. You do not send that big international wire directly from your main bank account.
Instead, you use an intermediary. Think of services like AirWallex or Pioneer as your buffer zone. You move money from your US bank to your AirWallex US dollar account. To the bank, that just looks like a safe domestic transfer. Low risk. Then, from AirWallex, you send the money wherever it needs to go internationally. This keeps your primary bank happy and your risk score low. It's all about having options and building a resilient system.
Okay, let's move on to play number 4, tax compliance. Now, I know this word scares people, but for most non-residents, it's actually pretty straightforward. It really just boils down to proving to your U.S. clients who you are using the correct forms. You're going to run into 2 main forms. The W-8BEN, that's for people. If you're just a person or you have a single member LLC that's owned by you, the person, you use this form. Simple. The W-8BEN-E, the E is for entity, is for corporations. So if you have a company in your home country that owns your US LLC, then your home country company fills out the BEN. That's the first step.
Now here's a little secret, a pro tip that trips up so many people. These forms have this super complicated section about claiming tax treaty benefits. But here's the thing. For most of you, filling out that section is a complete and total distraction. Let me show you why. Here's the key insight. That whole treaty benefit section, it only matters if the person paying you in the US is legally required to withhold tax from your payment in the first place. This usually only applies to passive US-based income, like dividends from US stocks or royalties from a US patent. But if you're, say, a web developer in Brazil providing services to a US client, that's foreign source income. There's no US withholding requirements on that, which means that entire confusing treaty section is totally irrelevant. You can just leave it blank and save yourself a massive headache. And for our 5th and final play, we need to talk about navigating the current regulatory environment. Because a huge new law called the Corporate Transparency Act has basically thrown a giant curveball at every single business owner this year. I mean, just look at this timeline. It's been a total roller coaster. On January 1st, this new law starts saying most small businesses have to file this new beneficial ownership report. Okay, but then just 2 months later, a federal judge in Alabama says the whole law is unconstitutional. And that created this massive cloud of confusion and uncertainty for everyone. And this quote right here really nails the current situation. While technically the court ruling only applied to the people in that specific lawsuit, it created what experts are calling a de facto moratorium. Basically, it's like someone hit a giant pause button on enforcement while the government figures out its appeal. So what's the play? What should you do? It's actually a pretty simple strategy right now. If your LLC existed before this year, 2024, the best move is to just wait. Your deadline isn't until the end of the year anyway, so just hang tight and see how all the legal drama shakes out. But if you formed a new LLC in 2024, you should probably just comply and file the report to be safe. And that really brings everything together. The core idea of this whole playbook is that succeeding in the US market isn't about memorizing a checklist of rules. The rules are always changing. It's about understanding the system, a system that runs on the logic of risk and compliance. Once you understand why a bank sees you as risky, or why a certain tax form is needed, you can navigate anything they throw at you. So I'll just leave you with this final question to think about. When you look at your business's financial setup, are you building it on fragile, short-term tactics that could break the second a rule changes? Or are you building a truly resilient strategy, one that's designed to adapt and keep you in the game for the long haul?